Good evening, Oak Bloke here, and I'm going to cover. This is an idea that I've covered before, I think, on here on YouTube, but maybe not certainly not recently. And so this is a fund called the Schroeder Global Innovation. So it's um, Capital Global Innovation Fund. So ticker INOV. Um, so one thing that I noticed this week was that there was a lot of venture capital getting sold off quite severely, and yes, I mean, okay, there's of course the Iran US war currently raging. Is that going to upend and destroy the world economy? Bit early to sort of assume that that's the inevitable outcome. I mean, we're what, 4 days, 5 days now into the whole thing, and from what I'm seeing on the news, of course, it's fog of war, and who knows whether what we're reading, what we're seeing, is the truth. But if things are progressing as rapidly as their people are claiming, then the overwhelming power, which was kind of my thesis on the wars, the US firepower, their level of intelligence, their ability to use bunker busters, and I'm not here to talk about the Iran war, but obviously with this sell-off, opportunity arises, and venture capital is one of these opportunity areas. And um, UK banking, or banking generally, has been a strong area. If you'd bought NatWest, Barclays, any of those, you'd have made a lot of money over the past 12, 18 months. But if you'd invested in this over the past 12, 18 months, the value of the bank has kind of not really moved. I mean, been completely overlooked. So hence the picture. So this fund doesn't build rifles. It doesn't employ snipers. None of that. It basically is a innovation fund investing into various different companies. um, but I think there's some value here in this article. This video is to explain why I think that. So look, I mean, you could buy this today at 13.4p. um, the NAV on it, the last official NAV as at last September, it's this RNS here, was that it was 21.42p per share. So something you're buying for 13.4 is potentially worth 21.4. But of course, the conventional perhaps approach might be to say, well, what if these companies get written off to zero? And if you go and read the most recent report, I mean, you'll see here, um, like everything from AMO Pharma down, 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 all of those down to here, Spin Memory, have all been written off to zero. So yes, I mean, yes, it could be that further companies are going to get written off to zero. Um, I mean, that's possible, but equally, when you look at the latest results, I mean, here's the top 10 NAV. So the NAV, you can sort of see here that it was broadly flat with a slight increase of 0.2 million. So, there was increases from Agrostar, Ada Health, Bizongo, Venture Holdings, which was the FX rate change, and then life science, contingent milestone payments, and greater uncertainty around probability, and so on. And then a public listed Autolus declined by 0.8 million. So broadly flat. So there's not really any evidence of more stuff getting written off to zero, but it could, it's not impossible. So I think that's why this is sitting at an official 37% discount. But when you get into the assets, and as I say, these are the top 10 assets, couple of things to say. I mean, first of all, this is how the top 10 assets stood at the end of September. But you'll see that there's this one that's sold, there's this one that's sold. So actually, when you factor in the news flow since then, you've got one that was sold at a over 100% gain, so wasn't sold at a 37% discount or written off to zero. It was a one over 100% gain, £4 million gain. Another one worth 7.2, sold for 7.2, so a 0% discount, not a 37% discount. So all of that kind of takes this to, well, a couple of things. First of all, that the cash has grown to 33.3 million for something that you're buying for 85. So essentially 5.2p of the 13.4p is cash. So you're really only paying like 52 million or 8.2p a share. And there's 7 reasons why I think paying 8.2p is an absolute steal, absolute bargain. Number one, so a big chunk of the the valuation is so just open this up here, is this company here, Atom. So 3.6p. So nearly half of the 8.2p is Atom Bank, valued at 23 million. But is it valued at 23? Is 23 million an accurate valuation, or could it be much higher? I mean, I'm sort of saying 30.9, but that is based upon the last valuation round was 362 million, which would mean that it would be, so sort of that 7.8 million, 3.3 of it was just down to the fact that the last funding round was at a higher valuation. But more than that, when you actually look at a couple of things, I mean, number one, the NAV of the company is hundreds of millions higher. Number two, you look at their results. So their latest results were 2025 results, and you can see net promoter score of 88. I mean, what bank gets, and I sort of make this point in here, like what bank gets an 88 net promoter score? I mean, nobody. But these guys do. Trustpilot 4.9. Again, how many companies get a 4.9 out of 5 on Trustpilot? Not many. I mean, that sort of gives you an idea that you've got banks, a lot of banks will struggle to get like double digits net promoter scores. The average is about 23. So when you've got a bank that's got a net promoter of 80, 88, I mean, it's massively different. So, or sorry, 89 even. And you can see here, customer growth, operating profit, deposits growth, lending growth, and this is up to March 2025. So obviously we've got the 2020, FY 2026 results ending 31st of March 2026 in a couple of weeks' time, which will be announced or released in late May. So a few months away. But in the last accounts, the net tangible assets were £424 million, and that included 38 million of intangible assets. But I mean, is it worth paying 38 million pounds for a bank that's got an NPS of 89 that is growing at 30%? I mean, to my mind, that paying for that intangible is very cheap. And also, if you look at the profits, really you're paying like 25 times profits for a company that's growing at 30% a year. Again, to me, you can sort of justify the valuation on either of those bases. And the other thing I would also go on to say is that the the um, the progress that they're reporting in 2025 is very, very positive. I mean, this is sort of how things stood back in the last annual report. But here, this kind of gives you a bit of a flavour. They've in 2025 they said it's our best year yet. Total loan book, they grew that by 29% in the past year. So obviously these are not finalised numbers; these are indicative. But they're sort of saying, well, last year this is what we know the number was this year. They've announced a couple of months ago that they broke through the 1 billion commercial mortgage milestone. Customer deposits, they've launched a cash ISA, so I'm estimating that at 7.5. They also announced that their customer numbers have grown to 270, which implies a 20% growth of customers. So all of those things make this sort of at least worth 7 million more, in my opinion. So quite a few things that they've done. The next one is Revolut. So again, this is valued in the books at 50 billion. Well, there was a secondary share sale late last year for valuing Revolut at 75 billion, and I'm pretty sure that Molten Ventures values it at around 70. I'd need to check that. I haven't checked that, to be fair, but they don't value it just as low as 50. So INOV are valuing it, well below its fair value as far as I'm concerned. So that would be another 6.8 million, potentially. Obviously, it's not guaranteed, but I was reading that last month, there's a discussion over a potential IPO of Revolut at $100 billion. Now, if it's $100 billion, it's not plus 6.8 million, it's plus 13.6 million, because it would be obviously double upside. So I'm not factoring that in, but I do know that the Revolut, again, same story, that in their last set of accounts, very strong results, extremely strong results. That they announced growth to 52 million. Well, again, the news flow is that they're now at 70 million. So, that 75 billion valuation again appears justified. UK customer numbers hit 10 million. Global reach, they're launching into Mexico, into Colombia, into India. I mean, huge growth runway for Revolut. Obviously, large number of services as well, and a large number of subscriptions as well. So quite a number of reasons to feel positive. Now, there are obviously a couple of companies where you can hold Revolut. As I say, Grow is another one. I'd say the one reason that I particularly like this is that you've got that combination of the two banks, and both I think are flying, doing good stuff. Moving on to Nexion, so not really a company I kind of thought I knew, but then I sort of put two and two together and went, oh, hang on, I saw those Nexion, be it there was an announcement from IP Group IPO. So this is that their South Korea factory is now operational, that they've got their customer Panasonic, that they are moving to production, so they're now operational. Again, like there's no upwards valuation as at last September, but then this is before the news flow of this happening. Now, I've not added anything to account for that news flow, but it's worth something as far as that goes. I'm not going to sort of guess at a number. I'm just saying there's some upside there. The same really with back market. So back market does refurbishment, repairs, and sort of recycles and resells electronic equipment. So if you've, I don't know, the latest and greatest, I don't even know what the latest and greatest iPhone is, number 18, I think it might be, or 17 maybe. But anyway, like if you've got an iPhone 14 or 12 or something, like no one wants that. Like, oh, it gets sold on eBay, which kind of works. But what back market do is basically say, right, well, we've got professional repairers. We'll basically do like 100-point checks. It's like buying a secondhand car, but you're buying a secondhand, iPhone or gaming console or laptop or whatever. So it's basically electronics recycling, and reselling. And it was interesting. I mean, there's obviously mixed reviews. Some people give it 1 stars. A lot of people give it 5 stars. Brilliant, bloody da da. Usual thing of like, oh, I rang up to complain, or I messaged them to complain, and it's been 12 hours and they've not got back to me, so I'm going to give them a 1-star review. There was quite a lot of that kind of vindictive, impatient people giving 1-star reviews rather than there being fundamentally. So I don't know, make your own mind up. But the fact that they're now profitable in 13 countries, 13 European countries, and I think there is a space for this, where there is that sort of counterculture of like, well, just because there is like the latest and greatest iPhone, like, we're using the world's resources and digging up more and more cobalt to kind of produce this latest iPhone. It's sort of like slave labor in who knows where. So there is that sort of counterculture of like, well, why don't we just make better use of what we've already got, type thing. So I think there are quite a lot of customers that will buy. I mean, I've bought secondhand. That's my iPhone and it's secondhand, and it's fine. I wouldn't go out and buy a brand new iPhone. I know there are those that will, and like they're the reason that I can buy a second-hand iPhone at a fraction of the price, and it's all right. Yeah, it's slightly slower, slightly older, slightly this, slightly that, but I don't care. I really don't care. I've paid like 70% less than you've paid, so I'm happy and you're poor. So yeah, look, I mean, as I say, there's a space for it. So the fact that that's now profitable again, I think it's encouraging. I've not put a value against that. And then we kind of come on to all of these. So these are deals that have been done, but that contain like follow-on uh, um, follow-on milestone payments, and none of this is in the NAV because it's obviously it's milestone payments. It's uncertain, but again, when you add these up, the Anthos, Araris, and these are sort of with large, it was large customers that bought these up that sort of took the sort of so Novartis with this one, Taiho with this one, and you can sort of see, potentially an extra 2.2 billion of milestone payments in this one. It was additional distributions of 43 million, based upon sort of performance and so on. And there's three of these. Carmot is a third one. So basically, when we add all of this together, I mean, you're paying like I've got pence per share over here and millions of pounds over there. So you're paying like 13.4, 13.5 for a share that last NAV, as you see here, is like 21.4p. But then the news flow kind of gets you to 22p because there was that sale, and so basically the cash is 5.2p, so you pay it like you essentially like 8.3p net to get 16 and a half pence worth of stuff. And like of that 16 and a half pence worth of stuff, I think I've included it in here somewhere. Yeah, here we go. 10p of that 16 and a half pence is just the core valuation of Atom Bank, Revolut, Nexian, back market, and then I've included in one of the AI companies that has been growing like Billio. If you go back over the last couple of years, that started off at like I think it was like maybe 1 million or 2 million, and it's now 6 million. So it's sort of tripled in NAV, tripled in valuation, and it's worth like a penny. But like that 10p, in my opinion, is pretty solid. Is pretty solid. Um, so the other 6.5, I mean, it's still there's no particular reason that I would say that that 6.5 is dodgy or could be sort of worth zero, but there might be one or two where, as I say, I mean, this is sort of the NAV as at last June, which is the last official one, and you can sort of see, yeah, there are a few in here that are sort of, now only worth 100,000, 300,000, 400. So some of these might go to zero as well. Although, obviously, like that one were both sort of, valued upwards and so on. So yeah, there's some element of that. But when you sort of say, well, the Atom Bank read across, if you agree with what I'm saying about the valuation is just hopelessly out of date, well, that's potentially worth another 1.2p. Revolut at its 75 billion valuation is worth another 1.1p. As I say, I've not valued anything on Nexion or back market, but I think there's something there. Araris, the potential distributions here is sort of another potentially 10p. So that kind of adds another 12.1p, which gets you to 34p. So essentially you're paying 13p for 34p, but where like 5.2 of that is cash anyway, and there'll be a distribution later in 2026. So if you pay 13.5p, you'll get, whether you'll get the full 5.2p or whether they'll keep some back for working capital and follow on investments and so on. But let's say, I don't know, 4p or 3.5p, let's say 3.5p if that comes back, you're paying 10p to get potentially 30p's worth of stuff. And I mean, it would have to sort of spectacularly crash, drop by 2/3 for you even just to break even. So, I mean, obviously it's not guaranteed, but it feels to me like there could well be some really monster results coming through with Revolut. It could IPO this later this year. Atom Bank could IPO this year. I mean, there's both talk of both of those IPOing. Um, Nexion, I mean, that could get scooped up by Panasonic or one of its customers. It's over in South Korea, so it's got, as I say, it's now producing. Back market seems like it's a decent company that's heading in the right direction. And then, as I say, I mean, these potential distributions are quite significant, actually. So yeah, that was sort of one that caught my eye this week. So hope that's been useful. It sort of just whizzes through these holdings, and as I say, I mean the yeah, it's sort of off the radar. And just to explain as well, I mean, this once upon a time was the I'm trying to think what it was called, the Woodford Patient Capital Trust, something like that. And of course, it got an awful lot of bad press. And if we went back in time and said, well, let's look at let's look at the let's see if I've got my yeah, here we go. Yeah, let's look at the share price going back. So if we search and say let's go and look at INOV, and then load it up there, which is, there we go. So yeah, if we look at the chart and go back, what, 5 years, something like that. I mean, you can sort of see it was at 35p a share back then. Back here it was, well, yeah, you can see how far it's fallen. So, people were paying like £1 for it once upon a time. And here we are, sort of 87% drop later. But I mean, I was buying it up here, look, where it was sort of, it dropped below 10p, and I was looking at the assets, looking at, Atom Bank and Revolut, and I was like, this is crazy. And like some of it's AI, and 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 yes, there were sort of things getting written off. There was quite a lot, I think, quite a lot of bad luck. That obviously this 2022, 2021, like this here was sort of where interest rates and inflation went shooting up. So it's kind of dropped by what, like about 70, 60% from here in the last 5 years, just because of interest rates and so on, and just like the appetite, excuse me, the appetite for venture capital was just not there. But as I say, I mean, you've got to look at the underlying assets, I think. And the banks, the banking, when you look at the read across for the banks, I mean, I'm just sort of just show you NatWest, as I'm not invested in NatWest or any of the big banks, because like why would I pay top dollar for this when I can buy like overlooked banks at a fraction of the price? But you can sort of see, compared to, like, again, that's over 10 years, but from what, late 2023, early 2024. So in the last 2 years, you could have bought NatWest at like less than £2, and it's now £6 and it hit £6.80. So it's tripled in the last 2 years. And, when you sort of look at NatWest, the net promoter score and things like that, they're not going to be on 18 at plus 89 net promoter score. Like, they're just not. Um, and I couldn't speak really for their growth metrics or whatever, but probably it's not going to be yeah, I don't think we're going to see like the growth, comparative growth aspects being superior to those of Atom Bank or Revolut. I think that see if we can. Yeah, here we go. Q4 earnings. So yeah, look, I mean, they've grown their earnings by about 10%, yet they've tripled in share price. So yeah, to my mind, it's just my own personal opinion, but I just think like these are just massively overvalued. I mean, if we go in and say, well, what are the forecasts for NatWest? There you can sort of see them here. Right. So we're looking at so in 2026, there's 6% growth, in 2027 10% growth, and then so that's earnings per share growth there, 10, so double digit growth, but we're only talking like double digits, just above double digits, 10p 11p. It's not that exciting. It's certainly not 30%, is it? So yeah, anyway, that's just a sort of my approach on looking at those two banks. And as I say, I mean, the AI, I mean, the two AI companies, don't know if there's something I can quickly share on that with you, but oh, sorry, AI. So there's, I think they call it AI number one and number two, or yeah, AI company, AI, oops, AI company. There we go. So oops, you'll see it there. AI company two resulted in, oh, sorry, I don't know why it's not, you sort of see me flashing there. Look, 6.6 million gain. So this is sort of, I'm not saying it's necessarily increased since then, but this achieved a 6.6 million gain. And I think the other one as well. So strong performance of AI company two builds on the um, significant investment from a new strategic investor. Obviously, it's sort of hush hush as to who these people are or who AI company number two is. It's all sort of not revealed to shareholders. But yeah, that's one of the other holdings here as well. So it's a couple of banks, a couple of AI companies. And again, like most AI companies, I mean, you'd be paying like what, uh, a huge premium anyway to their valuations. Whereas here, potentially, you're paying like 76% off an AI company. I mean, you couldn't make this stuff up, could you? um, which seems very bizarre. But as I say, I mean, it's just people kind of think, oh yeah, Woodford, load of whatever, and very negative towards it. And I just like things where it's just patently, to my mind, patently obvious that it's just overlooked and ignored. Because eventually, I mean, last year I can't remember exactly how many pence it was. It was maybe like 7 pence, but there was a substantial payout last year where they did a tender offer, um, and that tender offer was it just meant that I got a big wad of cash back, because yeah, they basically sort of had sold off enough stuff that they sort of said, right, we're going to sort of wind down this fund and just do like tender offers to. So essentially, it's the NAV price less the costs of the tender offer, which is about, I don't think it's about zero point 0.2 of a pence or something like that. So you end up with like 21.8 pence. But yeah, it's pretty, like there'll almost certainly be another one of those later this year. And obviously, if they've sell off any more companies, because they're looking to, I mean, they're not looking to hold these for any length of time now. It's just let's wind this thing up and move on. That I mean, you could get back, as I say, like 3p or more, later this year, which then sort of leaves you with sort of, about 10p per share left in this. So anyway, that's enough from me. Hope that's been useful. Cheerio from the Oak Bloke. Cheerio for now. Cheerio.